Welcome, and thank you for tuning in. Today, I'm going to talk about purchasing investment properties and 4 different ways that this can be done. But stay tuned. The first one is mind-blowing. We haven't seen this before. Okay, the first one is actually something that has just come to market. I've actually been waiting on it for 5 years now, and I was actually blown away when I did see it come to market. And it goes like this. Everybody has heard of blockchain, right? Or Bitcoin. Bitcoin is actually created on a blockchain. It is really at its essence, it's new technology. But there are many other types of blockchains, also known as cryptocurrencies. And a good portion of them are actually built with utility in mind. So really keep in mind, blockchain, cryptocurrency, it's really about new technology and it's where the future is going. We're going to see over the next 3, 5, 7 years, a lot of assets go and be actually tokenized and be on the blockchain. It is the wave of the future. And a company just came out called Lofty.AI. And their premise is they have tokenized real estate. They actually have a portfolio of investment properties that one can go on their site and register, and then you can purchase tokenized versions of that property. It's pretty darn incredible. And they're using a blockchain called Algorand. Algorand is very commonly known in the industry and very reputable. So I was happy to see that. And the way it works, you can actually buy one token and you can buy a lot more than that. I think they max out at 15% of the property value one can purchase in any particular property. But here's some of the neat, cool things that it'll do. You buy an investment property, you will actually receive rents received daily from the property. You have a property manager takes full control of the property in regards to if there's deferred maintenance that needs to be done, tenants that need to be replaced. All the accounting aspect of that is taken care of, and there's actually, it looks like a fund set aside to fund those ahead of time. So if anything pops up, there's money available to use on that property. And I've seen, again, as low as $28, you can invest in real estate. And if you look here, here's their portfolio of properties, and they've got rates of return. Here's a property in Missouri. They've got a projected rental yield and then a projected annual return anywhere from 12 to 18%. Myself personally, I invested in this property in Texas. It's got 14 to 17.2% return. So there's all kinds of properties that you can invest in with as little as I mentioned, $28. Here's a property for $42 a token. Here's the $28 token property. And all you would do is if you wanted to invest in this real estate, you come over here and you can see here. Oh, that's the other thing is they've got all the pictures of the property like it's on the MLS. They do an appraisal on the property that is in their site, so you can review the appraisal, and it's done by a third-party licensed real estate appraiser. And then you buy, and the way you buy tokens is you do have to set up an account first, okay? And you have to KYC, which is essentially in the finance world, know your customer, because they are going to be reporting this to the IRS. So they're going to have you verify by driver's license or some form of ID. They're also going to have you input your social security number and some of your basic information, okay? And I would suggest, I tried it on my lap or on my desktop first, and that didn't go very well. I would recommend do it on a mobile device. They seem better at taking that. I had to try it multiple times, and then I went to my phone and was able to KYC much easier that way. And the way you invest, there's one of 2 ways. As I say, this is on the blockchain. So they used USDC. If you're used to cryptocurrency and have a wallet, you'll be familiar with that. You can actually transfer USDC into into their site once you've established once you're on their site and part of their system. And if you don't know what USDC is, it's what is called a stable coin. It represents represents one coin for $1. So it's almost like the dollar. Okay. Another way you could do it is you can actually link your checking account into the system and pay that way. That's the way I've done it. They use something called Plaid here, which is I'm in mortgage lending. We use it. Most lenders use it. It's done throughout all of finance. You're essentially going to link your account, your checking account. You're going to put in your username and passcode, but the way the system works is it's not saved within Plaid system, and it's one of the most secure systems out there. So I was happy to see that they were using that. And then again, so you would go in and you can, once you're set up, you can start buying and selling properties. Now there is a 5-day wait on mine, as the first time through, it's communicating with my bank to bring over those funds. Okay. I have done this on other sites, cryptocurrency sites, and once they've done it once or twice, it goes a lot faster. I can buy that really in real time at that point. So pretty cool way to buy real estate with not having to come up with a lot of money out of pocket. So it's, again, Lofty.AI. I will include a link down below. Actually, if you use that link, you'll get $20 worth of real estate. And what I should share with you this first segment is this is not financial advice. I'm just sharing with you information on how one can actually invest in a investment property, as I said, as low as $28. And you not only get a rate of return daily on it, you also get any of the appreciation on the property. And the way I see that happen is you will go up in value. Those tokens will go up in value. And then, a year from now, if you wanted to sell, you could sell right on their site as well, is the way I look at it. So that's one new cool way of investing in real estate. Now, there's a couple other ways to invest in real estate. Some are very traditional. I'm going to cover those, but the next one that is unique is called DSCR loans. Okay, DSCR loans really are based on the property themselves. They do take into consideration the client and their credit score. So credit is going to have something to do with it, but we don't even have to put employment on the application. So we're not running what we would traditionally run is a debt to income ratio. They're actually qualifying you based on the property. And what the way that works is you have to be able to have where your principal, interest, taxes, and insurance, what we call PITI, does not exceed the rents on the property. And the way they establish what the rents are on the property, if there's not a tenant in the property, they're going to go off of the rents survey when the appraisal is done. Or if there's tenants in the property, they're going to look at the rent survey or whatever the tenants are renting it for, the lesser of the two. So the thing to keep in mind there is if you can rent it out for $2,000 a month, as long as your PITI does not exceed $2,000 a month, you have the credit scores and the down payment, you can purchase that property. Now, one of the things we do see, I'm in California, so we see, we have very high real estate values here. And in California in particular, often you're needing to bring in 30, 40% down to be able to get to that PITI level. Now, if you're in a different part of the United States, you may be able to put a lot less money down. The programs do allow for as little as 10% down. But again, if you're not getting to that PITI level, then more money is required to be brought into the picture. Now, the third way is really more traditional. Actually, the next two ways of buying investment property is the more traditional. And this next one is really, we see young people this working for, young mobile people that are really out in the work world, making themselves established, is where you buy your own personal property. You make it your primary residence. And you can come into the picture with as little as 3% down with Fannie or Freddie. There's actually, even if you're a first-time home buyer, there's down payment assistance programs, things along that line that could help you out. And you have to live in the property for at least 1 year. That's required as your primary residence. However, after 1 year, it's kind of like all bets are off. You can actually then move out of that property and make that a departing residence and a rental. So that's not unusual. We see that where young people will do that a few times. And the good thing is you can use 75% of the rents of that departing residence to offset that mortgage and the cost of that departing residence. Now, again, you have to be making some pretty good money to be able to afford now 2 homes, even with the 75% of the rents offsetting that mortgage payment. So that is another way to do it. But certainly seen many people do that over my career and build a portfolio of 3 to 5 rental properties over a 5, 6, 7, 8 year period of time. And then the last way would be your more traditional buying an investment property as an investment property, putting 20, 30, 40% down. It's a great way to acquire property. And also, one of the good things about that is, it's going to appreciate over time. You've got a little bit of a tax write-off with it. Ideally, you're cash flowing on it as well. And then that makes a lot of sense. If you're not cash flowing, that does make it makes it a little more difficult. If you're having to write a check for an investment property each month, it would just depend on how much that is. But typically over time, as values and rents go up, you take advantage of that from a financial perspective. So those are the different ways that one can invest in rental properties. Again, I'm going to leave the link to the Lofty product, which if you see here, you get $20 of real estate if you sign up within the first 7 days of clicking on this and start buying properties. They'll give you $20, okay? And I don't represent this company at all. It's just something that's come across. I've been probably the last 5 years waiting for this to come to market, and it just recently did, which was pretty exciting. So if you liked what I was sharing here, I would appreciate it if you would share, like, and subscribe to my channel. I'll be sharing more investment real estate type tips as we go forward. Thank you and have a great day.